Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 28th, 2025, and we're diving into BankUnited's first quarter earnings report for 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. BankUnited has kicked off the year with some interesting results, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. BankUnited reported a net income of $58.5 million for the first quarter of 2025, with an adjusted earnings per share of 78 cents. This beats the analyst's forecast of 74 cents. John, what are your thoughts on these figures?
It's a solid start to the year for BankUnited. The adjusted EPS of 78 cents not only surpasses the forecast, but also reflects a strong performance compared to the same quarter last year. The net interest income, although slightly down from the previous quarter, remains robust at $233.1 million, indicating effective management of interest expenses and income.
Funding and deposit growth. BankUnited's funding profile has shown significant improvement this quarter. Non-interest-bearing demand deposits grew by $453 million. Can you elaborate on the implications of this growth?
Absolutely. The increase in non-interest-bearing demand deposits is a positive sign, as it reduces the bank's reliance on more expensive funding sources. Additionally, the growth in non-brokered deposits by $719 million and the decline in wholesale funding by $1.1 billion indicate a strategic shift towards a more stable and cost-effective funding base.
Loan portfolio and asset quality. Moving on to the loan portfolio, BankUnited reported a decline of $308 million in total loans. How does this affect their overall financial health?
The decline in total loans is primarily due to seasonal factors and strategic exits. However, the loan-to-deposit ratio has improved to 85.5%, which is a healthy sign. The net charge-off ratio of 0.33% remains manageable, indicating that the bank is maintaining good asset quality despite the reduction in loan volume.
Capital position and dividend increase. BankUnited's capital position appears robust, with a CET1 ratio of 12.2%. They've also announced a dividend increase. What does this mean for investors?
The strong CET1 ratio reflects a solid capital foundation, which is crucial for weathering economic uncertainties. The increase in the dividend to 31 cents per share, a 7% rise, is a clear signal of confidence from the management in their financial stability and future prospects. It's a positive development for investors looking for income and growth.
Operational efficiencies and future outlook. Finally, let's discuss operational efficiencies and the future outlook. The net interest margin has slightly decreased to 2.81%. How does this align with their strategic goals?
The slight decrease in net interest margin is due to the declining rate environment and expiration of certain cash flow hedges. However, the reduction in the cost of deposits to 2.58% shows effective cost management. CEO Rajinder Singh's optimism about the year's prospects, despite macroeconomic uncertainties, suggests a strategic focus on maintaining operational efficiencies and capitalizing on growth opportunities.
Key takeaways. In summary, BankUnited has delivered a strong performance in the first quarter of 2025, with a net income of $58.5 million and an adjusted EPS of 78 cents, beating expectations. The dividend increase and robust capital position further enhance its investment appeal. Thank you for joining us, John.
Thank you. It's been a pleasure discussing BankUnited's performance. They seem well positioned for the year ahead.
Thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial insights. We'd love to hear your thoughts on BankUnited's performance in the comments below.